Unfiltered opinions.
Sometimes you have ideas and you're not quite sure why.
As you secure the bag.
Sometimes you meet people and realize there's probably a reason why you stayed in touch.
Just listen.
Sometimes all the pieces just come together by themselves.
I'm Jimmy Moyaha.
And I'm Simon Brown.
Welcome to Insider Exchange.
We move on to our deep dive, and we are joined on our deep dive by managing partner at African Uriti Capital, Precious Mhlandhla, to take a look at the gold market. We're going to be taking a look at some very interesting changes in global regulation and how gold is seen as a reserve currency from a capital perspective in the context of the banks. Now, recently it's been announced that as of the 1st of July, so coming up in about a little over a month, under Basel III banking regulations, banks now are classifying gold as an asset, as a tier 1 asset, as a tier 1 high quality liquid asset. Previously, it was classified as a tier 3 asset, which basically meant that banks would be able to hold 50% of the market value of that particular asset in the form of physical gold. Now they'll be able to hold 100% of the market value toward their capital reserves. So big changes from a banking perspective. But what does this effectively mean from a currency perspective, from a country balance sheet perspective?
So it's interesting because, central banks don't care what you want to call their money. They consider it all liquid. This is for banks, like Standard Bank and stuff, although
Commercial banks.
That's the word I'm looking for. How much gold do they hold? Maybe they hold none because it was a tier 3 asset. And therefore, why go buy $100 or something and get credited with 50? That would just be silly.
Yes.
Do banks now rush into the market and buy gold? Because gold is volatile. And it's one thing if you're a central bank, and we technically have shareholders in our central bank, but it's fine if you're a central bank. But if you are, some Shabalala,
as a commercial bank.
Yeah, and gold goes down instead of up, and suddenly a whole lot of your tier 1 assets get sliced. Do commercial banks want to hold gold? I don't know.
But okay, so here's the question from that perspective is, if I'm a bank and I'm sitting on cash, is it better for me to be in cash or is it better for me to be in gold? Granted, yes, I'd be buying gold at a very high price at the moment, and I don't know how much longer it will remain at these high prices. Is it better for me to be sitting with cash when I'm already, in the context of South African banks, I'm already lending less, right? So I've adjusted my lending requirements and things. So I'm lending less potentially. Yeah. I'm sitting on more cash. I'm sitting on more reserves. Yeah. What am I doing with that money? Is it not?
And that's just it. Because, but also, don't you like cash? Because cash has, so if you're Standard Bank and you have ZAR and you lend in ZAR and you report in ZAR and you pay salaries in ZAR and you make money in ZAR, you've got zero volatility in that.
100%.
Because it's just ZAR. Now, as soon as you reference it against something else, you've got zero volatility in it. As soon as you add some gold into that, now you've got these moving parts. It's the same with their added US dollars. Sometimes they're going to make, sometimes they're going to lose, but it's those potential swings that are really playing with your capital adequacy. And to be clear, our banks are all overcapitalized. They've got more than they need. But if I were a CEO of a commercial bank, I'm not sure that I'm rushing out to suddenly go and buy gold. I think it's nice. I think it's a recognition for gold, but I'm not sure we're going to see commercial banks buying it. There will be outliers, much as you've got MicroStrategy, who's just all in on Bitcoin. There'll be some outliers, but the volatility would scare me.
Yeah, so to add to that point that Simon is mentioning, so right now it's the flavor of the market. The gold prices has actually been going up. Look, it's a store of value, which is the traditional view, but there is an element of volatility. It doesn't go one way. It's ordinarily what you'd find in the market was that there was an inverse relationship. When the market is going down and everyone is panicking, everyone sort of piles in and then the price goes up. We've not really seen that as a direct correlation. So if it's now a key component of your capital adequacy and your capitalization, those moves have to be repriced, because if your capital is set at a certain percentage, right, and then the gold price has to move down, then up and down, it's almost like you at what point do you have to buy more? Do you have to sell out? So again, look, it is a good good thing that is happening. Are we going to see banks piling up from the current cash positions or treasuries that they're sitting on and replacing that with gold? I don't think they'll be rushed. For South African banks, maybe, but I don't think you're gonna find them switching what they're currently holding as part of their capitalization and then buying gold.
Yeah.
They will nibble in and see where that goes, but I don't think there's going to be a wholesale.
What about central banks? Now, we've looked at the commercial banks. Central banks this year alone have added more than 240 metric tons of gold. And they plan
But
to
pause
increase.
there a moment. Metric tons.
Yes. Yes.
That's a
That's
ton
a
of
lot.
of gold.
It is.
And they don't plan to stop because there's expectations that, or according to the World Gold Council, that we could potentially see central banks, or at least 30% of the central banks say they still plan to increase that number from where we currently stand, right? Now, that comes to the question from a South African perspective around our GFECRA account, the Gold and Foreign Exchange Contingency Reserve account that we've now tapped into to alleviate our budget issues and all of that. That then means that our central bank could be looking at saying, okay, if we then hold more gold, which is interestingly enough, while we're on the South African central bank specifically, while other central banks have increased their amount of gold, the South African central bank has not increased the value of gold that they hold.
So I was looking at it. It stayed static for about 2 decades now at about 125 tons. Although, interestingly, here's a fun fact, and we must do this one Wednesday. So on Wednesdays between 9 and 12, strictly by appointment, you can go and sell your gold to the Reserve Bank.
Strictly by appointment. Anybody can do that.
On a Wednesday between 9 and 12. First, we got to buy some gold. Then I think,
And then you want to sell it to the
then we
central
go
bank.
to Pretoria and sell it
And
to
then
the central
sell it
bank.
to
It'll
the
be
central
fun.
bank.
We can put a suit on. We might get to meet the minister. It's a beautiful building.
Really, it is.
And then you bring your briefcase and
And go on the briefcase.
So going back to central banks globally are definitely going to buy. The perception around gold being a store of value has not changed. That's in centuries. The other fun fact is that there's little else use for gold apart from that. It's just hoarding it and putting it in vaults, and that's it.
But also, you look at it from a exchange point of view. When you look at reserves and you look at your trade balance and you look at the surplus reserves that you have, like our contingency reserve account, you then you put it on your balance sheet and say that's an asset that we have as a central bank, and therefore, effectively by extension, as treasury, the US Treasury, the Chinese Treasury, our own Treasury, it's used by governments to say that is our reserve.
100%. That has not changed. The bulls are talking of the gold price going to 4,000. The guys that drive the price is not your retail guy. We were having this conversation earlier. It's the institutional guys. So the institutional guys are hoarding it for whatever reason. I mean, and that's also red central banks. So you're going to find central banks actually buying it, and it will push the price up. But the conversation we're having around banks buying, you're not going to see a wholesale shift immediately, where banks are saying, as part of our capitalization, we need to replace US treasuries, for example, and then go buy gold.
Because it also locks you into a different kind of, like I said, exchange rate exposure.
The one benefit of gold is its fungibility. And that's over centuries of, we understand what 24 carat and stuff, or 24 is 99.99 and that sort of stuff. That fungibility is really important. You don't get it in oil, you don't get it in agri, you even always get it in PGMs and stuff. Gold's got that centuries of it, which is, and silver, but really silver.
Yeah.
And I know there's some of you, sorry, you love your silver. But it's the fungibility. And it is kind of that store of value. It's that volatility, man. It's fine when my Anglo shares are down 10% on a random Monday after reporting giant numbers. But I don't know if you want that if you're, a CEO of a bank.
Yeah.
Yeah.
That's going to be interesting to keep an eye on. It's going to be interesting to see how the central bank market starts to look at it as, not central bank, the commercial bank market starts to look at it. From a investor point of view, we've always known retail investors in various shapes and forms, and even institutions as well, might have a bit of exposure to it, might have a gold ETF here and there. Very seldom do you see a hedge fund say, we're going to go buy physical gold bars and build our strategy around physical assets. We do live in a digital age. They might hold that in terms of a digital value, but the physical side of it becomes a different conversation,
Yeah.
which then brings me back to what I wanted to take a look at from a South African perspective around the fact that we haven't increased as a gold miner,
Yeah.
as one of the biggest producers of the asset itself in the world. Surely, if everybody's strategically piling into that as a government, as a
Central bank, maybe.
yeah, I mean, from a government perspective, right? If everybody's going after the asset, and the asset is in your home turf, it is underneath your ground. Surely you must keep some of that for yourself. Surely you must just be like, you know what, guys, we don't know why these people want this thing, but let's just, increase our own reserves.
I agree.
Doesn't that position South Africa in a better position financially?
Sure.
Yeah,
But apparently not.
Yeah, well, it's not happening. I mean, look, it's not as fast, but yeah, it's. I mean, and at the moment, it's the flavor of the market at the moment. I mean, everyone is talking it up. It's been going one way. The price is what 3,300.
Yeah.
Yeah, all the bulls are talking 4, and whoever is holding
3,200 at futures as we speak.
3,200. Yeah. So, and the bulls are talking of it going one way, and I suppose what has happened with all this uncertainty, to use that word again, is everyone wants some safe haven, and it still retains that as an asset class. Yeah, whether or not the South Africans are going to make a decision to start buying it, to dig it up to the ground and keep some.
Well, I mean, companies like Anglo Gold and Harmony are already doing the digging. If we go back to Si's point around passing executive orders for Jimmy's haircut, surely you can just pass an executive order for a certain amount of reserves to be kept in the country. It would be a drastic move by the government, but it would be a protectionist move. It wouldn't be seen as not acting in the best interest of the country.
I agree with you 100%. And most of our reserves are there for US dollars, which is fine. And I appreciate that dollars should, over the long term, appreciate in value against the ZAR, if nothing else, an inflation rate differential. That's also fine. And that gold is volatile. But you're a central bank, man. Buy up some gold.
Yeah.
Feels like low-hanging fruit,
They got
doesn't it?
125 tons, right? They sold 250 in the last quarter, like nothing.
That's what I'm saying. Surely it feels like a low-hanging fruit situation where you can just say, hey, we want some of that here. We're going to... And if you're looking at something like a Harmony that has, you said, an all-in sustained production cost of what, $1,600?
Anglo Gold, yeah.
Anglo Gold, sorry, right?
Yeah.
And you as the central bank then show interest in it. Okay, cool. That's what we want to do. And the mining company then says, no, we want to charge full retail because this is what we can get for it outside of the country. You have two options there, right? You can buy it up, or you can tattletale to Daddy Dearest, being the government, and say, we want to buy at a certain price. Therefore, any South African company can then buy gold at a cheaper price from a South African miner.
Yeah, or they can just pay sticker price.
Or they just pay sticker price. It's not really. It doesn't really bother people too much around that.
Yeah.
We're going to leave the gold conversation on that note, folks. We'd love to hear your thoughts around that. If you were in the position of the banks and you had the option to hold gold in physical or otherwise in other forms, would you do that? Is there still value in it for commercial purposes, for trade purposes, for leverage purposes? Share your thoughts. Give us your comments around that, and we'd love to hear your take on that. We're going to leave the deep dive on that note. We're going to get into investor insights. We're taking a look at banking charges and the costs associated with certain things like streaming services, but also the fact that the FSCA is now investigating banks for how much they're charging us. So stick around for that. And we wrap things up with a look at Investor Insights. We're taking a look at the latest news affecting the banking world. The FSCA has decided to investigate banks for how much they charge individuals, but it's also been revealed by the team at My Broadband that South African banks in particular, certain banks charge more for international subscriptions to things like Netflix and Showmax and all of these other subscription services. So depending on the international transaction, streaming services are being charged differently by banks because of how much they charge for online payments and cross-border online payments in particular. Very interesting that South African banks would have, I suppose it's not really surprising, they have varying charges on everything else, so why not cross-border transactions?
Or that non-interest revenue, hey?
Right.
They need to grow that line.
Where you can stick around and decide this is how much
So
we're going to
non-interest
charge.
revenue used to be like if you bounced a check or something like that.
Yeah.
Now it's like, oh, no.
anything has got
And I'm looking
interest.
at it here. So it's like $3, $5.47, R2.74. I mean, none of it is big numbers, but like, really, guys?
So the study that was done by the team at My Broadband suggests that if you're looking at a Netflix premium subscription at 199 Rand, right? One bank might charge you 4.98 for that subscription. Another bank might charge you a flat fee of 3 Rand, which they've had in place. Another bank will charge you 5.47 Rand. In the grand scheme of things, it doesn't seem like a lot. It is what, a 49 cents difference between that. But if you start to think about it, adding up over all of the people that have that subscription across banking clients, that's additional revenue.
And if you think $5, $60 a year for the client. So firstly, for the bank who's got 10, 20, 15 million customers, not all on Netflix, I appreciate,
Yeah.
but still.
Yeah.
But for you, it's $60, but that's Netflix. How many streaming services? What else have you got out there?
Exactly.
You know, maybe you've got a New York Times subscription. Maybe you've got this,
A
that,
Bloomberg
and the
subscription, one of those things,
All
yeah.
of those sort of things. And suddenly it's like, which is why, sneaky, I have a US dollar virtual credit card.
Yes.
So like when Bloomberg gives me a dollar amount, I don't put a South African bank card in there.
Yes.
It's silly. I put a virtual card in there and in dollars. So I pay when it says it's whatever, $20, it is $20.
Yeah,
There we
it
go.
is. So if you look at it in absolute numbers, it looks like it's insignificant. But the bottom line is you for the bank, they got a couple of million customers.
Yeah.
It adds up very quickly. So how I would look at it in that the investigation is actually looking at the broader revenue that they're deriving out of those incremental small. You can look like it's 4 Rand here, 2 Rand there, but if you look at it, it's ultimately a huge figure. I mean, it adds to the bottom line if you really think about it, and it's recurring revenue, right?
Yeah.
It's on an ongoing basis every time that you subscribe. So people don't look at it as because it's a 2 Rand, 3 Rand, but ultimately, I think for the banks, it's good
It
money
adds
that's
up.
coming. Adds up.
And this is probably why the FSCA has announced that they're looking to investigate banks' transaction fees. They made this announcement quite recently, saying that they would be taking a look because they, as the FSCA, monitor the conduct of banks as financial institutions. Yes, folks, the banks, while being regulated by the South African Reserve Bank, also hold FSP licenses, and therefore the FSCA has kind of a bit of flexibility in terms of investigating certain things. They're taking a look at the conduct standard for banks that they had published in 2020, and effectively that standard kind of governed the banks in terms of how fair treatment works of customers of financial institutions and those sorts of things. So interesting now that the FSCA has decided to look at this and say we're going to now take a look at whether or not banks are employing unfair practices. And the FSCA in recent times has not been afraid to fine people. They really haven't.
They haven't. And you know what? I mean, look, no one out there loves their bank, I don't suspect.
Unless you're an Investec client, I'm guessing.
Really? I don't know. I still, no, the answer, do you want to be an Investec client, shareholder, or staff member? The answer is staff member every time. Then
some
you love your
wisdom
bank.
there.
If you work, but I mean, the fees are just like all over the place. Just like all over the place, there are fees. And yeah, I mean, let's put some pressure on. No, I mean, I don't know. Are they, I mean, I don't know what they, I mean, surely in a free society, you can kind of charge what you want and the consumer decides. And let's be clear, the consumer has decided. We've gone to Capitec. And we've said it before in this show. If you look at the traditional big banks, Nedbank, FNB, Standard, and ABSA, they were moving into that private bank space. They're moving up market. And they're basically saying to Capitec and Time, help yourself. Like, we don't want that anymore. Because who can make money in a 5 Rand bank account when Discovery can charge 800 Rand a month? Or what, sorry, Discovery, I don't know what it is, but it's lots. You know, and it's that. But I mean, what authority does the FSCA have to say you're charging too much? Unless there's unfair practices. For example, in the US, if you've got a bunch of debits that go off, they sort them by the highest first, so that if you run out of money, there's all the tail ones. You get more bounces, and they charge per bounce. Now, they're perfectly legitimate to bounce when you haven't got money, but if you sorted from the lowest first, you would have less bounces because they charge per denied payment.
Oh.
So there's scams like that, and that is just out and out scam. I mean, that is just stealing money because you search that way, not that way. I mean, that is a decision a bank has made that is anti-consumer.
Yeah.
But absent of that, they can charge what they want, surely.
No, 100%. The retail main guide that's just right at the bottom, it becomes significant. So if you really think about it, the motivation for it, I mean, we don't know what the conclusion is in terms of whether there is unfair practices or not. But at the end of the day, we should not look at the absolute numbers. But for a retail customer, that's like your typical Capitec Time Bank client, those small charges that they're being levied across on their bank account become something. Look, for a guy that's running a couple of Netflix accounts and then is a sort of middle income to high income customer, whether or not there's a 4 or 5 rand taken from the account doesn't change anything. So the motivation is always, it adds up again. I mean, it's for a retail guy, if you get a bounce happening and then you add all those fees up, and some of them are punitive. If it bounces, I think on some of these banks they will charge you what they call an excess fee or something, and it's like a standard 20-30 rand. Then that they knock
On a
off.
debit order that was 15 rand or whatever
debit
it was.
order that was 15 or 190 rand.
Yeah,
So if they take another $50 off you and they do it 3-4 times, they've taken 200 rand out of your account.
Well, let's see how the FSCA gets on with those investigations. Let's see what they rule on those sorts of topics. And this kind of throws us into our stock pick and our pick for our wall. Our particular pick for our wall this week is off the back of what you said, Sai, around the fact that some of the banks in South Africa have elected to forego the little guy, whereas Capitec and Time Bank haven't. And I want to look at a bank in South America, Nubank. They are the ones that invested in the Time Bank business. They're a big shareholder in Time Bank, but they are also, I think, the largest fintech bank in South America for what it is that they do at the moment. How do we feel about that?
No, so Nubank is a very interesting, been around for about 11 years. 56% of the population in Brazil, the adult population, are now banking with them. They've been a disruptor. They went from 0 to 110 million customers in the 11 years. Now they're running a Time Bank type model where it's pretty much branchless. So they don't have any legacy cost. So the cost per customer, I mean, I was watching one interview. They're servicing those 111 million customers with 7,000 employees. And a traditional bank would have, for that same number of customers, would have a couple of 100,000 of employees. So very interesting. The results are out this week. They had record revenue last year. They've gone into Brazil. I think they're in Colombia. I can't remember what the other country is. But
now in South Africa via Time Bank, effectively. Yeah.
So they're literally banking that Capitec guy. If
Banking the unbanked, and that's how a lot of the models have been moving. Sai, are you liking the stock?
I like it. I mean, it's expensive, but then hello Capitec. So like it's PE. No, it's PE's 30. So what is Capitec's PE? 30. To your point, so Capitec weirdly is quite branch intensive, but Time Bank not. They use pick and pays and the like. I think it looks really, really good. And it's not sure it's expensive, but it's in grow up stage. And there is just that South American market. I mean, there's some weird stuff. There's the Amazon of South America, Calibre Cabre, which is just astounding. There's a company in Brazil making their own airplanes, Bombardier. There is stuff happening in that
LATAM
market.
is one of those markets,
And it's got population and it's got middle class. It hasn't got the levels of poverty that we have in Africa or in parts of like China and the like. It's got middle class.
Growing middle class. Okay, so that's interesting. We'll add it to the wall. We'll decide if we like it enough to put it. Do we like it enough to put it in our blue chips? I mean, Capitec is blue chip for us.
Yeah, so this is surely not blue chip yet.
No.
It's
Not
still
yet.
to start
Okay,
but
okay.
it's in, I don't know.
Like it.
Like it.
Okay, cool. So we like it. We're going to put it there. We're going to update that into our wall. It is Nubank. That is our thought on Nubank, folks. It is not financial advice. We are not in the habit of that. You've seen the disclaimers. You've heard the disclaimers. They are on both the audio and the video show. So please don't say that this show gave you financial advice when we actually didn't. We were sharing our opinions and our thoughts. Speaking of opinions and thoughts, it is time for our unfiltered opinion of the week. This one is not something I've thought of. However, I would like to get your thoughts around it because it's quite an interesting statement. I'm going to read the statement, then I want Sai and Precious to give me their thoughts on the statement. And I'm going to read it as it's been said. The Pope was chosen in 2 days. Your remote hire doesn't need 5 rounds of interviews. I said what I said.
Hey, I've only ever gone through interviews once, and it was 3 rounds, and it was 1974, and that person is 100% right. The Pope is, come on, the Pope's in 2 days, 133, and they want a 2/3 majority. Yeah. Beep on the money.
Spot on. I mean, look, I think some of this becomes an interrogation. Think about it. You make your decision on first impressions normally. The guy walks in, you like him or you don't. The rest of it you can train. So why take the poor?
The rest of
What's the
it you can
The rest
train.
of it you can train.
Exactly.
Good hires are well trained.
That's it.
That's the unfiltered opinion of the week, folks, is you don't need to go through 5 levels of interviews. If you do go through those, give us your experiences. We'd love to know what your best and worst interview experiences have been. And if you are a hiring manager, do you agree with the statement that things can be trained and first impressions count? That's the show. We're going to leave the unfiltered opinion on that note. Like, subscribe, follow, do all those nice things. But until next time, investing isn't hard. Just try it.